Welcome to the third episode of The Question of Money. In this episode, we are going to talk about should you take a loan, or in other words, how to distinguish between good, bad, and terrible loans. If you're a young salary earner, there's a good chance that you're being stalked by people offering you loans. So all of us get so many SMSs, calls, spam from lenders, banks and NBFCs offering to give you loans, interest-free loans. They tell you loans can be processed within minutes. But if you give in to all this temptation that is offered to you, you will soon find yourself neck deep in EMIs. This is why while taking a loan, you need to make a distinction between good, bad and terrible loans. So what is a good loan? Can there be a good loan? Because your parents tell you never to borrow, right? Suppose you are working in an organization and you write the CAT exam and you got admission in IIMB and your course costs you 24 lakhs. You can't afford the course. So you decide to take a loan. Now I call that a good loan because this is a loan that can help you earn more income in future. It actually lifts your skills and ability and lifts your income for all time to come. So education loans in my book are actually good loans because they add to your future income potential. So good loans are all those loans which either add to your income or to your wealth in future. Another kind of good loan could be a loan that you take to buy, say, a home or a plot of land in a great location. Now, though you pay interest on the loan, if the property appreciates sufficiently over the next 5 years or 10 years, you will be creating wealth for yourself. So this is again one kind of a good loan. When taking a loan from a bank or a lender, most folks do not add up all the EMIs they are paying over the years to find out what is the amount that they are paying the bank. Sometimes if they do that, they may be shocked. If you take a 15 lakh loan from a bank for 7 years at 13%, did you know that you will actually be paying the bank 22.9 lakhs? If you make these kind of calculations, you will know why we are saying that good loans are those where you buy an appreciating asset. But life sometimes throws googlies at you, right? You suddenly got a job in a new city and you need to move to that city and buy a new bike there. The Bajaj Pulsar that you wanted to buy, it costs 1.5 lakh and you don't have that much money saved up. So should you take a loan for that? Well, that's not a good loan because the Pulsar that you buy within 5 years, by the time you pay off your EMIs, it will be fetching you less than what you paid for it. But this is an okay loan because this is an absolute necessity if you want to get to work in time. There are 3 types of loans that could be terrible in my books. Firstly, the loans that don't fund a tangible asset, but they fund luxuries or experiences. Now, someone may ask me, what's wrong with taking a loan to vacation in Spain? The problem is, if you always spend on things that you cannot afford with your current salary, you may end up borrowing again and again and living in a debt trap. It is not a pleasant experience to be paying EMIs up to 2028 for a 1-week trip that you took in 2024, right? A second case of loans being terrible is loans to keep up with peers. Now, all of us may have friends who are wealthy or earning more than us. If we spend on various intangibles and experiences in order to look good in their eyes or to look good on social media, and if you borrow to do this kind of spending, that qualifies as a terrible loan. Now, there's a third category of terrible loans, which is the loans that you're taking simply to make your ends meet. Now, if you are in a situation where every month towards the end of the month you're running out of cash and you need to borrow even to buy groceries or say to eat out with your friends, that shows that you have a habit of overspending or exceeding your income. When you get into this kind of a habit, you can really land in a debt trap because these small EMIs that you accumulate can really add up to a lot of money over time. When you have to borrow to make ends meet, this is not even a sign of decisions that you're making which are wrong. It is a sign of addiction to borrowing. So what you need to do quickly is to de-addict, stop borrowing completely and focus on paying off these loans even if it means tightening your belt. So in this video, we discussed what are the good, bad and terrible loans and should you take a loan at all. In the next episode of this series, episode 4, we will be talking about how to choose between investment options.